Hey everybody, Marty Mazzora. Excuse me, good evening, June 7th, 2016. I'll make it quick this evening. This is your first commentary for the week. The 1 year daily chart in front of you, last two bars would be yesterday and today. So as you can see, the rally that started, this near-term rally that started on May 19th has continues to go, and it's a very impressive rally, very steep slope. Technically, things are looking a little better. Some of the other indicators I've shown you, in fact, let me just pull it up. This moving average convergence divergence, which is a momentum oscillator, you can see I still have a downward slope, but you can see it's gotten better of late, and it's beginning to look less like this kind of this false signal that we got here, and being above this zero line is also positive. So while the divergence, the bearish divergence is still there, that's a better looking MACD than what it's been. Relative strength still has a slope to the downside, but again, that's flattening out as well. Breadth for the market, the advanced decline line, other breadth indicators as such are actually improving as well. Here's the on balance volume, which is still not what I want to see, and I'll show you more volume stuff up here on this histogram. But suffice it to say that particularly with the breadth indicators looking better, small caps have rallied very nicely of late, which is also a good sign. NASDAQ is coming on strong. So there looks to be more, at least a better argument that we are on the cusp of moving on to all-time highs for the major averages. This is the S&P that you're looking at. All that said, I still want to see better volume. Typically, when you are rallying, it's very important, particularly when stocks are going higher, to get confirmation from the volume. Now, I just showed you the line chart for the on balance volume. This one just really gives you the day to day. And as you can see, at these successive short-term tops, we just have been hitting those on lower and lower volume. I circled here yesterday and today. This one here, the second one from the right, that's yesterday. Yesterday, the Dow was up 113 points. Today, it was up 17 points, but it was up 70 or 80 at one point. Now, as I checked on it during the day, it was happening on even lower volume than yesterday. We got that spike, looks like the last probably half hour, 45 minutes when stocks came kind of barreling lower. In fact, the NASDAQ closed in the red. So a lot of that volume actually happened when the market was falling today. So I'm just not getting that sense that there's this big rush to the market. I do think there's a lot of cash on the sidelines. I know mutual fund managers have an unusually high level of cash in their funds. I know that individual investor sentiment had been very bearish, almost historically bearish. There's three ways the AAII, American Association of Individual Investors, looks at sentiment. They survey their members and they say 6 months from now, are you bullish, neutral, or bearish? And bullishness has been at a very low level, which generally portends very good things for the market going forward. But it hasn't been that everybody's been so bearish. There's just been huge neutral sentiment. So when it's neutral, investors, are kind of at odds in terms of which way to go, one way or the other. And so as the market climbs higher, that could give them some hope that maybe, particularly if we get through this all-time high, this dotted line here on an intraday basis, that's 2135. On the S&P on a closing day basis is 2130. But for me to really tell you that this is something that maybe we should continue to expect, I really want to see this volume chart turn in the other direction and show some real commitment to the upside. Otherwise, when we have the biggest volume days on the down days and we have continuingly lower slope on the up days, that tells me that we probably should expect some downward volatility. Now, I've been saying that for a while, and we just haven't been getting it. So it doesn't have to come true. I'm not saying it's impossible to melt higher for a long time on lower volume. It would just be somewhat unusual in the historic scheme of things, if you will. And of course, we have headwinds. Although the headwind of the Fed, the very near-term headwind, I think is probably entirely off the table after Friday's jobs number and yesterday's commentary from Janet Yellen. The Great Britain referendum on June 23rd, the polls still have it pretty much a dead heat. The odds makers are actually, or the betting line is actually showing the odds of a Great Britain leaving the European Union are actually increasing, although it's still, in the mid 70% in terms of the likelihood that they will remain. I see it as a mountain of uncertainty that I think makes it very difficult when push comes to shove for folks to vote their way out of the European Union. It could happen. If it does, we are going to see a great deal of volatility in either direction. Actually, in the financial markets, I would expect currencies to be a mess. And it would be, I think, somewhat violent on a near-term basis. It would be anything but the end of the world, of course, and it would take quite some time to actually move their way out of the European Union. But it would just be so unexpected, despite what the polls are suggesting right now, that I just don't think the markets are going to be prepared for it. In fact, when I look at measures of fear in the U.S., like the volatility index, it just doesn't seem to be there. It just actually looks like complacency right now. And of course, when we get further into the year, we have this U.S. election to contend with. So, folks, on a longer term basis, I am exceedingly constructive on our long term global and globally diversified equity portfolios. In fact, as I've suggested of late, I'm more constructive on the non-US portion for the next few years than I think I have been in a long time. And I'll offer up more support in the weeks to come as to why I feel that way. In the meantime, we just need to keep our heads about us. This is just me helping you put the short term into perspective so you're not too excited when volatility occurs. And I suspect we've got some in both directions ahead of us. Thank you, as always, for watching and listening, and I'll talk to you very soon. Bye-bye.